Hey everyone, Aaron from EK Financial Group. Just got a tax tip for you guys coming into June 30 in the next few weeks. So if you ever heard of your concessional contribution caps in your super, well, what the government allows you to do, if you haven't utilised all of those since 1st of July 2018, you actually can roll them on for the last few financial years and do a catch up on those contribution caps that you've missed out on. So each year, you're allowed to put in $25,000 as a concessional contribution to super. So concessional contributions are made up of, firstly, your employer 9.5% that they paying for you on your behalf, plus any additional voluntary contributions you do above that, like your salary sacrifice. So if you haven't used up $25,000 for the last 3 financial years, so 2018-19 year, 20, and this financial year, 2021, you can actually put in a lump sum contribution to make up those missed amounts and claim it as a personal tax deduction. There's a few rules on this, and you obviously do need to get advice, depends on your own circumstances, but in general nature, what it means is that first rule is you need to have less than $500,000 as a total super balance on 30 June the year before you make this contribution. So if you decide to do it this year, 30 June last year in 2020, you had to have $500,000, less than $500,000 in your super to qualify to do this. Who would want to do this? Potentially maybe a business owner that's had a good year. Maybe you've decided to sell an investment property this financial year and you've got a decent tax bill coming up from capital gains. Maybe you sold some shares. Or maybe you just pay a lot in tax and you've got some savings sitting around and you want to utilize this to get a bit more of a tax refund or a tax deduction for this financial year. So all you need to do is actually make a contribution to your super fund as a member contribution or personal contribution. There's a few ways that your super fund can usually receive this type of money. Traditional ways, BPay. Maybe your fund has a form you can complete and send to them. They'll debit your account. Or the third thing is if you're using a wrap account or you got a self-manage, you probably got EFT details to just simply transfer to a BSB account number. Couple other rules other than the $500,000 limit or super balance you need to have less than to be able to qualify. The other rule is getting it in before 30 June. The money has to physically be in your super fund before 30th of June this financial year. So don't go and send a BPay on the 28th, 29th. That usually does take 3 to 4 days to clear. Could be even longer depending on your fund. So make sure it gets in early. The second thing you need to do is after the financial year is passed and before you do your tax return, you must put in a form called a notice of intent. So this form goes to your super fund to say, hey, that money I contributed, I want to claim that as a tax deduction. The fund will then be notified to take out the contribution tax of 15% from that money you deposited, send it to the ATO. Then you'll get a confirmation letter that you can simply give to your accountant to say that that amount is now tax deductible or claimable on your own marginal tax rate or personal tax return. So then the main rules around it, there's the best way to find out what your unused caps are to actually log into your MyGov account or speak to your accountant on some ATO portal to be able to locate it. But that will have every single contribution you've contributed and what has been rolled over from each financial year. So let's say you only contributed $5,000 in 2019 financial year. It still means you've got 20 grand that got rolled into the next year. Maybe you contributed another 5,000. So there's another 20. So now you've got $40,000. And if you're doing $5,000 this year, there's another 20. So there's $60,000 effectively over 3 financial years you've got the ability to claim up to, depending on own circumstances. Obviously, if you're a client of ours, you've got an advisor, please check with them on your limits, what you've put in, what you're allowed to put in, and also get advice from your accountant because it's very important how much you need to claim or want to claim that year. Obviously, your accountant's got to do some numbers for you. So if you're getting FOMO and think, well, I want to do this, but I don't have the money right now, don't stress because this will roll on again next financial year and the year after. So they roll on for 5 years. So the amount you didn't use up in the 2020 financial year, 18-19 financial year is actually going to get cut off from 2020-23 financial year to 24 financial year. So you still got another year or two to actually use that amount up. So don't stress too much, but there's a pretty cool way. If you haven't made any contributions to super in the last 3 years at all, through work or personally, maybe you're self-employed, haven't put any money in, you've effectively got $75,000 that you can put in this financial year and claim it as a tax deduction. Depends on your own circumstances, obviously. Get good advice, But there's a cool tax tip that hopefully can help you guys. You don't have to utilize it all. You can do some of it, and whatever you don't use can roll to the next year as well. But hopefully this is helpful. If you want any more advice personally or individually about this, please reach out. Happy to have a one-on-one chat. Also speak to your accountant about it too. I hope you enjoyed this tax tip, and see you guys soon. Thanks.